FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And we are back. You are listening to the Financial Survival Network. It's Kerry, Lutz. And, well, the markets, like the rest of the world, are a mess. We've got Peter Grandich on with us now to try to make a little bit of sense with him. Peter, how are you?
Pretty good there, Kerry. I don't know if it's able to make sense of an insane market, but we'll try.
All right. So, hey, gold, they've been trying to bring it back under 1,300, and external events just seem to keep getting in the way, don't they?
Yeah, it started a week ago Monday. If you remember the Friday before, we just closed right at 1340, which was a very significant technical level, the first of 2 that gold needs to get over in order to really get going with its renewed leg up. And on the opening of that Monday, someone, and if you think about it, there's an agenda because no one sells $1.3 billion worth of gold right at the opening of something. You would piece it out. Let's just call a spade and know that someone had an agenda other than to liquidate a position. My feeling on it was, and I'm not a conspiracy type of guy, was they knew what Yellen's speech was going to be about. They knew they could not afford gold. Continuing that rally was about to rally past a significant resistance area. And the thing that, again, which you and I have talked about through most of 2014, is while gold may not be rocketing up, all these attacks, whatever you want to call them, can't keep gold down anymore. It may not reverse back up and go up a lot, but it no longer plummets and stays lower. And that's just a sign of a change in times, and we're getting very, very close to when even those attacks won't even be able to keep it down maybe for even a day.
Yeah. And, even silver, it's staying pretty well above the $20 mark, close to 21. And you get to a point where, the cost of production has just basically become a floor under prices, right?
Yeah, actually, silver is leading gold here. I think silver actually has a better technical pattern. It was deeply oversold. I put up some charts a week ago. Very simple without people looking at something. Relative strength typically when it gets above 70 and heads to 80 or 90, something's overbought. And that's what I meant to say earlier. And when it gets down below 30, and we had extremely high readings, and it took a lot of that overbought scenario off. But here we are as we speak. It's battling above $21 again. I actually think silver is leading gold, and I think in the next few days, silver is going to make a significant run to a very key resistance number, not just because it's round, but it has a lot of technical implications, and that's the $22 level.
Yeah, that 22 is kind of key, and it looks like they've been fighting that level, trying to keep it away from there, but at some point, it's going to break it. It certainly appears.
Yeah, and I think people need to just take a breath and understand that gold and silver is managing to do this in the face of almost daily news of new so-called highs, even though they're not much higher than they were a day or two before in the stock market. Now, that in itself is questionable because as you get into the market's more broader indexes, some of them are actually down for the year. But everybody hears the Dow and the S&P, and they hear that. And all the excitement and the attention and the flag waving is for the stock market, and, of course, none for the gold and silver market. Yet they're managing to do this. I can't begin to think when the inevitable minimum correction or the inevitable bigger slide in the stock market occurs, how more beneficial that'll be for gold and silver in its present condition. So I know it's a little frustrating for people, but we're seeing just some very, very good technical action in the gold and silver market relative to what it was like a year or two ago when it couldn't show this resilience. And I just think it's a sign of, much better days are ahead for us for the balance of 2014.
Hey, and it just, you're a Wall Street guy, so I just wanted to talk to you about this, something that David Stockman had a lot of people talking about. Like, he uses the example of IBM, which really hasn't seen its profits go up for years, but it's been basically going into debt, added 20 some odd billions of dollars worth of debt to buy back its shares to artificially inflate its per share earnings price, thereby inflating the stock price. But really, the actual operations of the company have been lackluster for years. And it's really just taking on that debt. They don't have to pay out a dividend on those shares then. So it's pre-tax money going to pay interest as opposed to post-tax money going to pay dividends. And that's been this secret sauce of Wall Street for years now. And we're running short on this, right?
You actually hit it on an extremely good point, something that I've spoken of late. I'm not the only one, obviously. But a lot of statisticians of the stock market who are not biased, in other words, they're not talking heads for the local, institutional firm or Goldman Sachs or something like that, has noted that in the S&P 500, almost 80% of the gains has been PE expansion, not expansion of earnings. And part of that is the very reason that you said, more indebtedness. That's why I've been screaming in the last few weeks that the corporate bond market is a disaster waiting to happen, and actually suggested going short it. But they have been manipulating their books to make things look better. It's not that the economy's gotten better, but they've done some fiscal things to make earnings look better, but they're not from what naturally used to be, and that is you make more profits, you throw the profits back in, you buy more widgets and hire more salespeople, and you expand your business. That's not what we're saying, and that goes hand in hand in why, despite all the debt that's been created, despite all the corporate debt that's come out, most people that you speak to throughout the country, and this is, again, what I bring to people because of my planning business and dealing with business owners throughout the United States, they all say, well, it must be happening with somebody else because it's not happening here. And there hasn't been a real strong economic bounce. And part of that also, and I think the Federal Reserve, when the hindsight eventually hits and everybody looks back, is one of the fatal mistakes that people, historians will note is the Federal Reserve try to pick up the job of Congress. And what I mean by that is we have not had, in my opinion, and that of just about every business chamber, every economic group that's involved in general business, whether it's mom and pop stores, all the way up to Fortune 1000 type companies, we have not had good fiscal policy out of Washington in decades, actually. And because of that, businesses and business owners will tell you how stagnant it is and how difficult it is to operate their business than it was 10 or 20 years ago. And the Federal Reserve somehow appointed itself as the guardian of the U.S. economy, and has stepped way out of bounds in these quantitative easings and the measures that they're taking, and we're not really getting a real bang for our buck. What's lost in all of this is the trillions of dollars more that exist as debt, and what really growth did we get for it? What can we look to and say, okay, are we better off today than we were 3 years ago or 5 years ago? And the answer across the board is no. So I just think we're in a hyper phase of the stock market. I think we're all pretty smart. If you got any half a brain, you know it can't last. It's kind of like a parabolic rise. There's no supporting mechanisms in the fundamentals. It's frustrating because just like, I don't know if anybody listening goes to casinos, every once in a while, one of those tables have a hot streak, and you can hear it if you're in the casino, and everybody's screaming and jumping up, but they always 7 out, and the casinos always end up making money, and unfortunately, that's what's about to happen on Wall Street as well.
Yep, the casino, and the problem here is that just like the casinos in Atlantic City are going out of business, these casinos aren't real healthy either, are they? No,
and you make a good point. Probably in Atlantic City, which is maybe I'm an hour and a half away from, within a couple of years, instead of 13 or 14, we'll have 3 or 4 left. We have seen the bulk of the action in the equity markets be by people who don't even know the name of the company and don't even care because it's some algorithm or some computer telling it what to do. Very few people are buying and because they think this company is going to make more widgets, and if they do, they're going to make more profits. And it really has become one big gambling arena right now because the bulk of the arena is profiting. No one's really complaining about it. And that's probably also the last thing that has kept a total revolt against Obama. I mean, I think a lot of people have seen through now that he's not a world leader on his geopolitical and political stuff. Whether it's
you
here,
think,
yeah,
you think, huh?
Whether it's here, with all the things that happen in the IRS and all that, and of course on the world stage. But why the average person is yet kicking up about it, even though the immigration and all stuff is, because the market is still fairly strong. The moment the market stops, I mean, the guy is just going to be, I think, in a sense, run out of town. So I think the Federal Reserve, and I think this is a mistake of the bears, somehow think that these people ain't smart. They may be going down a wrong road, but they're still pretty smart people. And they keep hoping against hope that if they can keep manipulating things in afloat, somehow Washington will fix itself and all. And but it's only getting worse, not better.
Yeah, exactly. None of the problems are being solved. And more when we return on the Financial Survival Network.
FSN Radio. It's all about what's next.
Do you have Medicare or health insurance through your employer? If so, listen up. The healthcare reform wasn't written to save the healthcare industry or even to lower healthcare costs. Shoot, it isn't even designed to insure the uninsured. It's just a temporary political byproduct. Like a flat rock you step on in a swiftly moving stream, Obamacare is just a means to an end. Want to learn more about Obama's ultimate objective? Then you'll want to review our latest research presentation found on oclies.com. In it, a health expert and industry insider explains what you think you know about caring for your health is about to drastically change in 2014. Plus, he details the simple steps you could take to save thousands of dollars per year in health costs. It's free for you to preview at oclies.com. Don't waste time. What you don't know about the healthcare reform could hurt you and your family.
The Financial Survival Network. It's all about what's next.
We are back. We're speaking with Peter Grandich, and the problems don't get addressed, but because the stock market's been going up, it just glosses over a lot of problems, and that's what gets the headlines. But once that headline generating machine is neutralized, shall we say, or at least not as effective, then all the other problems will suck up the oxygen, right?
Yeah, there are a whole host. Well, you don't have enough time to go through some of the clear and evident problems. Another one that I have spoken about in several weeks, and finally I'm seeing some real media attention to it. And that is, we all know that in what caused a big part of the last financial crisis was the selling of bad mortgages to people that we knew couldn't afford to pay it back. The people who sold it knew that. And then, as I like to describe it and put it in layman's terms, it was like auto companies built cars they knew were going to crash, and then they bought life insurance on the driver so when they crashed, they would collect. Well, right now, we're seeing that now done in the auto industry. And we're seeing subprime people getting cars, and those loans are being packaged by the Goldman Sachs and all just as the mortgages were and sold to people for yield. And the difference is people are basically, as the trade likes to call, upside down now, that meaning that people owe more on the car than the car is actually worth. But unlike a house where a lot of people fight to stay with it and hope that they could turn it around because it's the roof over their head, the people that are upside down with the car will eventually goes, enough is enough, to come and take it. And so we're going to see two things. We're going to see a big hit to the auto sales, in my opinion, and we're also going to see reports start coming out how people lost money on Wall Street buying these packages of these auto loans as defaults start to get very serious, and people who bought them for income not only lost the income but lost their principal.
Yeah, Peter, I never have been able to understand how a product like securitized auto loans ever were sold in the first place. I mean, obviously we learned absolutely nothing from 2008, 2009, those things should not be permitted to be sold. I mean, it's insanity.
I'm going to tell you, Kerry, I would have said I don't understand it, but I moved into a retirement community, 55 and over community, back in 2009. And so a lot more of my so-called friends or people I speak to on a regular basis are not only 55 and over, but many have retired. Half the people living in this community of 300 homes have already retired. And one of the things I picked up here and across in my general work is so many of these people have been chased into a dangerous yield quest throughout the world because so many of them had planned retirements or made retirements on interest rates that 10 years ago were much, much higher. The average plan, if you went back and looked at financial planners' proposal, even as late as the early 2000s, had a 6, 7, 8%, income type return on it. Well, where can you get that without substantial risk? And so what's happened is these are the very people that are susceptible to the sales of these products because they really need this in order to survive. They cannot last on a half or 1% of putting their money in the bank. We probably know at least 5 or 6 people have sold their homes because of that. So this is another problem of the Feds artificially creating substantially low interest rates, and it's something that isn't spoken about. But when we're on the other side, when we're going through a crisis like, again, it'll be pointed out and exemplified. The politicians will stamper and call in these heads of people, a few people be smacked. But as we both know, no one of any consequences ever ended up going to jail for the mortgage scams all around the world. So I doubt very much they're going to go to jail over the auto scams.
Yeah, I think you're right. If you're looking for justice, you better look elsewhere. I mean, basically, the U.S. has become a banana republic here. Go back to the S&L crisis back in the late 80s. I think 1,000 or 1,400 people were prosecuted in that scandal, Peter, and it cost the country initially about $190 billion, and then after the recoveries, it was about $30 to $50 billion, I think. But here we've got trillions with no end in sight, mind you. All the banks are still illiquid, and the same Captain Blighs are still running the ships, right?
Yeah, and the indignance is this. Look, maybe there's going to be a few people that hear what I'm about to say and are going to reach out to you and go, how could Peter Grandich say this? But I know by and large most people can go, he was absolutely right. Let's face facts. If anybody thinks this IRS scandal has occurred because all these computers suddenly went bad, and they literally lost their hard drives, and no one has the emails and all. What's the old story? I got a bridge for you cheap.
Sure thing.
Look, the bottom line is, if we're right about that, and it was done in that regard, if you think about it, of all the groups, the IRS, the very group that's in charge of really collecting the taxes and making sure monies are collected that people pay their rightfully share and so the government can operate and all. If they're doing that, imagine if we tried the same excuse with them. Oh, you wanted my tax return? I'm sorry, but my computer blew up, the hard drive disappeared, and I'm not, it's the insanity of how many scandals, if you think about, have happened. We had Benghazi, and before Benghazi, could everybody be on anybody's mind? We had the leaking and people taking reporters' information. Then we had the IRS scandal. Then we have immigration scandal. This is just one scandal after another. And what, of course, I understand the media is left-leaning and all that type of stuff. Thank God for the Internet, because we now have, 20 years ago, we wouldn't even learn about a lot of these things. We have people out there that can speak objective about it. But this is a scandal-ridden administration. I mean, at the end of the day, I don't know what historians are going to be able to say what the benefit was of Obama being president for 8 years. I really don't. I can't look anywhere, and it's not because of his color, his skin, or where he might have gone to church for 20 years and the people he listened to. The bottom line is, when you look at it, I don't think there's anything to point to. And so eventually something has to give. If all that is happening, if Washington's a mess, if the economy is not good and all, eventually, no matter what artificial means you take and what the Fed does, eventually reality seeks in. So we just have to operate regarding the U.S. stock market, it's not a question of if, but when it comes crashing back to earth. Do I think it's going to be 20% in a day? No. Do I think it'll be at least 20% from the high to the low? Absolutely.
Yeah. Well, one would think, because historically values always assert themselves, right?
Well, there's going to come a time when it'll be very, very tough. It is now, for the few handful of independent valuation managers out there that try to buy value, you just hear from them. They basically have to look overseas. They can't find here. In fact, ironically, I had just thought perhaps one of the most negative people on gold and mining shares for years recently said that realistically in the U.S., other than energy and mining stocks, he can no longer find any group that's remotely close to being either undervalued or fairly valued. Everything else is overvalued. So I just think that, we're seeing that change. I think it's one of the reasons mining shares have done rather well in 2014. And like I said earlier, with the gold and silver market being resilient and eventually the stock market petering out, I think we're going to see gold and silver move to the center stage of the financial industry and the journalism. And when it does, it's going to have its day. It's going to find a lot of new momentum money coming in. And that's when we're really going to see some substantial gains, which I think is, coming for the balance of this year. Yeah.
Well, it's going to be soon. At some point, it has to happen, because this is a topsy-turvy world here where, like you said, value just has no part in the equation. And I know valuation is always a relative type thing. There's no absolute valuations, but, it's just, I don't know what to say. It's just craziness.
Right. And, it's the old story of everybody wants to jump off the roof. Do you jump off the roof just because everybody's doing it? Are you one of the ones that just sit down and don't partake? And that's what we just have to do for the time being.
Yeah, I think you are correct. I think value always reasserts itself, right? I mean, it has to, because when the market crashes and you have, PE compression, whatever, value comes back, right?
Well, what you have to remember, and maybe this is the way to go out on this, is after 30-something years, most investing is pendulum driven. Just like in life, we go from one extreme to another. So is there a pendulum in the market. The pendulum is swung extremely excessive to making financial assets, stocks and bonds, extremely overvalued, and the things on the other side extremely undervalued. The swing comes back, and what happens with pendulums, if you remember, they don't usually just swing back to the middle. They have to get almost extreme to the other side, and that's what I think is what we're going to see, and that's what is going to help drive the metals market and things related to metals for years to come, is that pendulum swinging back and favoring it again.
Absolutely. Well, on that note, Peter, just tell us where we find your work, where we can read what you have to write.
Sure. Money Talks, one word, Money Talks, TALKS.net. And when you get to that website, if you look at Peter's content, I post multiple times during the course of a week about markets and the economy.
All right. Excellent. And you'll find the links on financialsurvivalnetwork.com. And don't forget to sign up for our free newsletter. Peter, we will talk with you again real soon. Be well.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.